And the market has already opened. Hope you guys are doing good. Have a happy morning. Have a great day ahead. We'll start shortly. Market has already opened. It's currently 9:31. Hope you guys are doing well and hope your portfolios are actually doing better today. So let's not waste any time now. So today's actually session will be going to be like a loaded one, and I'm just going to walk through exactly what happened overnight session, yesterday session, and what exactly happened yesterday's in the whole market and while closing. So and we are also like seeing why we are giving some gap ups today. We are, and what's the exact opening numbers, and then the most important part like which stocks are seeing heavy open interest build up like today. So you know exactly where the smart money is positioning. So stay with us, stay in the session for this all this information we'll discuss together. So yeah, first things first, we'll quickly discuss about the yesterday's close of 8th of July because you need to understand yesterday's story to understand today's gap up, right? So yesterday was honestly a rough day for the whole market. Sensex it has closed down by 1,677 points. That's actually a fall of 2.15%, closing in 76,503. Nifty lost close to 517 points, dropping 2.12%, settled at 23,882. So, and if you are watching Bank Nifty, it had actually got hit very even harder. So, down by 1,450 points, about 0.5%, closing near 56,742. So India VX, which is our fear index, actually spiked up about 30% intraday yesterday. So which actually telling you how much panic came into the whole system in a very short period yesterday. So yesterday, whatever happened, you guys be wondering, you guys be like confused why it happened. Okay, most of the people know, but still there is actually only single reason, which is Iran. Like overnight before yesterday's session, and again during the day, tension between US and Iran flared up very badly. Trump basically came out and said that. Ceasefire with Iran is over, and his exact words were like something Iran is not worthy dealing with anymore, and the US, which carried out fresh strikes. So this obviously spooked the global markets because the fear is always the same. If this escalates, it hits the Strait of Hormuz, and that's the route through the which huge chunk of the whole world's oil supply and its passes. So the moment that fears every sector is read yesterday. PSU banks, private banks, and auto, oil, gas, FMCG, even IT and pharma couldn't actually escape the selling. So rupee also weakened along with this news. So overall, yesterday was actually a proper risk-off day. So yeah, let's just talk about what happened overnight in the US markets because of course it directly sets up today's opening for us. Dow Jones it closed down about 577 points, roughly 1.09% lower, and ending around 52,348. And S&P was down smaller, which is 0.28%, closing near 7,482. But and yeah, this is actually important. Nasdaq, which actually closed positive, up by 0.2%, around 25,870. So you might be wondering why did Nasdaq hold up while Dow Jones like fell? Because chip stocks did really well overnight. Broadcom jumped close to 4.8% after it expanding its component agreement with Apple, and Nvidia rallied about 3.6% on this report that Chinese companies are planning to buy more of their H200 chips. So tech and semiconductors gave some support even while their broader markets was actually a bit nervous. Actually, the biggest overnight story was crude oil. Brent crude shot up more than 5%, trading near $78 a barrel. And WTI crude, which jumped over 4%, it was trading close to 73 to $74 per barrel. So this is a direct link to the Iran situation, as we discussed. And Trump again said overnight that the US could hit Iran hard again. So the geopolitical risk premium is sitting right on the top of this oil prices right now. So airline stocks in the US got like hurt very badly because of this news, and American Airlines fell almost like 4%. United dropped around 2.5%, and Delta and Southwest also slipped. So same logic applies to our aviation stocks like Indigo. So keep that in your mind for the further information and the knowledge. And also, there is one thing worth noticing is the Fed's June meeting. Like minutes actually came out, and some policy markers actually indicated their consider another rate hike if inflation stays elevated. So that added a bit more nervousness globally because with oil price rising, inflation worries come right back to the it's stable. Actually, there is a gap up. So we'll discuss why there is a gap up. There must be a news which is going on, which actually impacted, and there is a gap up, right? So now coming to the big question, we are seeing opening with a huge gap up after such a brutal fall yesterday and sudden fall yesterday. Gift Nifty this morning was trading somewhere in 23,915 to 23,978 zone. So, which was actually signaling a flat to midly positive opening, roughly 0.2 to 0.4% higher than yesterday's Nifty, which is close of 23,882. That's exactly what played out. Nifty has opened with a gap of 78 points today, and right now it's trading around 23,960 as you see. So Bank Nifty has also gapped up nicely. Currently sitting around 57,061 level, which is actually gap up of the roughly 318 to 320 points compared to yesterday's close of 56,742. There is a kind of bounce. You might be thinking why there is a bounce. So, there is actually few reasons. Even though the Iran headlines are like kind of scary right now, US markets didn't actually collapse overnight, as you guys saw yesterday. Especially Nasdaq actually closed green, so that gave some comfort. And the second thing is yesterday's fall was like steep and fast, as you guys observed, almost like 2% in a single session. So some amount of technical bounce back or short covering was like overdue yesterday, especially with the Nifty's put call ratio sitting around like 0.61 this morning, which is quite stretched on the lower side. So historically, that kind of extreme reading often triggers contrarian buying from the institutions. And the third reason will be India VIX is around 14.5 is elevated, but now near panic territory. So the market isn't actually pricing in a full blown crisis right now, more like a watch and wait mode on Iran. One more important trigger for the today's market is earnings season, which I mentioned in yesterday's session also. So today TCS is announcing its quarter one results, and this is officially starts the IT earnings season. So because of this, many traders are buying IT stocks in advance, expecting some good results. That's one reason why the market sentiment is looking a bit positive today, but actually you shouldn't just don't get too excited. This gap up is happening because of some few reasons together. First is yesterday's market fell sharply, so today we are seeing some relief bonds. Second is the US Nasdaq close strongly overnight, which is actually supporting global markets. And third is many option positions had become oversold, so we are just seeing a short covering. And finally TCS results are like creating some positive expectations in the IT sector. And also at the same time, we should stay careful because the Iran-US situation is still not fully settled for now. And Trump he has said that more strikes could happen in coming days. So geopolitical risk is still there, and also crude is also trading above $78 per barrel, and the high crude prices are not good for the Indian market in the medium term. So actually, you should enjoy the gap up, but don't just blindly chase the market. Trade with the proper risk management. Wait for the confirmation and stay disciplined. So now quickly talk about some sectors from yesterday's market. Actually, we have some quick update. We can discuss it. So yeah, guys, I'll be telling you two stocks. You should actually keep your eye on for today. Just keep this in your watch list. Yeah, the first one is Amber. So yeah, guys, I was talking about the Amber. Just keep these stocks in your watch list. Yeah, you can see here it's currently in the uptrend, and all of our indicators you might be observing. It has given in the green. All those are in the green here in the multi-frame matrix, and currently it's trading near down of this near second resistance, and it's going. It's in uptrend, and our software also right after the you can see at 9:16 right after market open, it has given buy signal. Currently though it's going up. For more details, for more movement, actually we'll discuss about the stocks kind of the session briefly. So currently you just keep this in your wish list and just watch out these stocks for now. Now since there is a movement and there is actually news which is triggering this stocks, keep your eye on these stocks now. Yeah, there is actually one more. See, the second one is Novama. Currently, this one is also uptrend, and here also you can check at 9:19 today. It has given buy signal. It's currently uptrend, and you can check the multi-frame matrix and the trend lines. All you can check. It's currently trading top of this resistance, first resistance. It actually trading near this supply zone also. So you can actually keep and observe this for the rest of the day. For more details, you just we'll discuss it very briefly by end of the session. About these two stocks. Just keep your eye on these two stocks. One is Amber, another one is Novama. Since there is actually few news and some news triggers for the stocks, and a very good movement is there here. Just keep these stocks in your wish list and check out for the whole day. So yeah, actually we'll talk about sectors from yesterday's market. We were talking about yesterday's market. We'll talk about sectors. So this will help us understand today's movement better. Aviation stocks, especially some Indigo, were among the biggest losers yesterday. The main reason was the rise in crude oil prices. And the higher crude means over higher jet fuel costs, and it's not good for airline companies. That's why aviation stocks came under pressure yesterday. Also, the oil marketing companies also traded weak because higher crude prices can affect their margins. And also, but it wasn't a complete sell-off across the market. Some sectors like realty and metal stocks actually managed to close it in the green yesterday. So this tells us that money was moving from one sector to another rather than just investors selling everything in panic. So, as we discuss it every day, the main important part is open interest. So, let's come to the most important part of today's market, which is open interest data. So this tell us where the traders are putting fresh money and which stocks are getting the most attention today. Starting with the Nifty, open interest has increased around 81,800 contracts, which is actually about 1.2% rise. So total open interest is now close to 69.4 lakh contracts. Volume has already crossed the 13 lakhs contracts. That's actually strong sign that traders are actively creating some fresh positions after today's gap up opening. So let's look at the stocks where fresh buying interest is visible. One is on the top, Kalyan Jewelers is there. Open interest has increased, which means traders are keeping a close watch on the stock today. And Finox Mills is also seeing some fresh positions since it's from the real estate and retail space. It could remain in focus if the realty sector stays strong. Also, the Exide Industries is another stock attracting some attention. Fresh open interest suggests that traders are expecting movement in the battery and also auto sector. PG Electroplast is also showing good build up, so keep it on your wish list for the day. Also, the Dr. Reddy's Page Industries. Apart from this, Blue Star, KFN Technologies, and HAL, National Aluminium, JSW Energy, L&T Finance, solar industries, and CAM, CAMS, and Mazagon Dock also seeing fresh positions being created today. So defense, metals, and also PSU related stocks like are quietly attracting traders for today. Also, even the large financial stocks like Bajaj Finserv and Bajaj Finance, Geo Financial, and LIC Housing Finance are seeing steady opening interest today. In additions, these aren't huge spikes, but consistent buying is often a healthier side than just sudden big moves. So overall, today's open interest data actually telling us that traders are not focusing on some in one sector. We are actually seeing fresh participations across whole jewelry and pharma, defense, real estate, metals, autos, and financials. That means stock-specific opportunities could be more important than just simply following the index today. So in Kalyan Jewelers, open interest has gone with 425 contracts of 0.79% of increase, and also Finox means it has OI up to 0.77%, Exide Industries of 0.75% with the 216 contracts, PG Electroplast is 0.69%, Dr. Reddy's labs, which actually I mentioned again yesterday, so it was over 1%. Today, OI has actually increased by 0.64%, adding 289 contracts, striking around the 1,330 mark. So actually, we shouldn't forget about the Bank Nifty. Bank Nifty open interest also like increased slightly by around 0.08%. But the trading volume is very high, more than 50,000 contracts, which have already been traded today. This tells us one thing that traders are very active in Bank Nifty. After the volatile moves we have seen this week, both buyers and sellers are cleaning their positions. So expect some like Bank Nifty to remain active throughout the whole day. So if we look at the individual banking stocks like Union Bank, Federal Bank, and Bank of India, Canara Bank, and also the Indian Bank, all are showing a small increase in open interest. So there is no huge buying in any of one bank, but overall the banking sector is showing some steady participation for now, especially in this PSU banks. So let's look at the other side of the market, which is the stocks where open interest is falling. When open interest falls, it usually means traders are just closing their positions or losing confidence in that stock. So today, Colgate, Palmol, we're seeing the biggest drop in open interest. And also Oil India is also showing a little bit decline. Indigo is another stock under pressure, which isn't actually surprising because crude oil prices are still high. Higher fuel costs usually hurt airline companies, as we discussed and as we know. And So also the Adani Enterprises and Swiggy also seeing a small drop in OI. The oil marketing companies like BPCL and HPCL also witnessing lower open interest mainly because rising crude oil prices are creating pressure on the sectors. So apart from that, Titan, Voltas, Chola Finance, and MCX are also showing a slight decline in open interest. Nothing looks like a heavy selling in the movement, but these are definitely like some stocks to look or keep an eye on during the whole today's trading session. So overall, if we take today's open interest data shows that traders are adding fresh positions in the banking, pharma, and defense, and also the financial stocks, while aviation and oil-related stocks continue to remain under some pressure because of the crude oil prices since it has raised. So before actually we finish, we'll talk about the biggest event of the day, which is as we discussed TCS quarter one results. So today TCS will announce its first quarter earnings, and this officially starts the IT earnings season. And you guys be wondering why it's important, and you guys have this question why it's important because there is a reason whatever TCS reports today. So whether it's revenue, profit, margins, or its outlook for the coming quarters will influence the whole entire IT sector today. So if TCS gives strong results and positive guidance, we could see buying in IT stocks. But if the results are disappointing, the entire IT stock sector may come under pressure. So if you are trading or investing in IT stocks, just keep an close eye on today's TCS earning. So let's quickly look at the important levels for today's market. So for Nifty, the immediate support is around 23,800 to 23,805. The first resistance is around 24,020 and 24,030. So if Nifty managed to stay above this resistance, we could see some targets around 24,000 to 30 and even 24,350 in the coming season sessions. So if the Nifty falls below 23,800, then the next downside levels could be around 23,650 to 23,450. For Bank Nifty, support is near 56,550, while the resistance is around 57,100. If Bank Nifty moves above 57,100, that sustains there, it could be a positive sign for banking stocks. So yesterday the market correctly corrected sharply because of raising geopolitical tensions and other higher crude prices. So today we are seeing a gap up opening, but you should remember this looks more like a relief bounce than a complete trend reversal. So open interest data shows that fresh buying interest in stocks like Kalyan Jewelers, Phenox Mills, Exide Industries, PG Electroplast, and also the Dr. Reddy's, along with some defense and financial stocks. So at the same time, aviation stocks and oil marketing companies and few FMCG names are also still seeing some presence because of this crude oil prices, which is actually remaining a bit high. So today's biggest things to watch are, as I mentioned, the two stocks, and here just to check out the movements and news triggers, which is TCS quarter one results, You check out the news and updated news about this and crude oil prices, and also the US Iran geopolitical developments, which will be there today. So whether Nifty can hold above its key resistance level, you observe that also. And yeah, as I always tell, this video, whatever we are discussing, this is only for educational and informational purposes. So please do your own research, or consult your financial advisor before making any investment or any trading decisions. Markets are actually highly volatile, so always use proper risk management and never risk more than you can afford to lose. See, guys, actually, as I mentioned, our software already gave a buy signal in the morning in Nifty, which is around 9:20. Yeah, at 9:20 it has given buy signal. Still, it's going up. Since actually market has opened, this index has opened in gap up today. See, guys, you can see it has went up by 0.34% in 50 minutes exactly. So you're currently seeing. So currently we have 85% of accuracy with this tool. Whatever the tool we are using, the software, the framework we are using, have 24 indicators integrated here with two indicators combined here. It's our company's USP. It's our USP. So we are maintaining 85% of accuracy, 80 to 85% of accuracy with this tool. So you can observe like a lot of multiple indicators are seen. Can you can see here. It can easily tell you the buy value and sell value, also the multi-frame indicator, multi-frame matrix, where in the here you can actually add your favorite stocks which you want. your favorite stocks, and you can see in the multi-frame matrix that is it uptrend or downtrend. Also the weekly basis, day basis, you will tell is it the market was bullish or bearish. It will tell you, and also it will tell you the whole outlook of the market. Is it in a sideway or bullish or bearish according to the considering this trend lines. And also we have the yellow line, which is actually stop loss, trailing stop loss. So if you want to get to know more about the tool we are using, so someone's actually asking. So on your analysis, what is today's Nifty goes up to which level? Yeah, some of the user is asking. We'll answer it shortly. We'll answer it. So yeah, actually you were asking about the Nifty, uh, up to which level it can go. Okay. So here, if it goes up, yeah, according to our analysis, it can go up to 24,165. I marked here. You just keep in your mind. And if it goes down, it may go till 23,808 here. You can see. Yeah, as I told, I think you got your answer. If it goes up, it can go up to here. 24,165. And if it goes down, if it shows down momentum, it may reach, there is a probability that it will reach by 23,808. Since it's actually bullish, it may go up to this level. Hope you got your answer. Guys, I have put the link in the chat box. You go through it, you can contact us anytime. As I mentioned, our tool, you can ask any questions about our tool, whatever we are using right now. We will give a brief demo about what and all the tools we are using, about the indicators. We'll give you a brief demo about it. Just click the link and you can contact us. My team will contact you. You will have a better and good demo.
So, hi everyone. We'll now discuss about index and its option chain. So, we'll start with Nifty. So when we look at the current levels of Nifty, Nifty is currently trading at 24,042. So it has regained the psychological level of 24,000. So today's range would be around 24,165 to 24,808. So if you see a break above this level, then wait for the proper confirmation, wait for the retest, then you can look for the levels that we get from the open interest. We'll just discuss that later. So this would be the key level for intraday for Nifty. So high chances of price closing near 24,165 if it goes up, and if you see a downtrend, then price highly likely to reach 24,808. If there's a downtrend, then you can expect the price to break this level also. Then you will also get a high momentum level. So our indicator has also have a strong resistance zone in this level. So we'll now just look at the open interest, so that we'll get a clear picture where are the proper supports and resistance for today's intraday. So open interest represents the total number of outstanding open contracts that have not yet been closed, exercised, or expired. So unlike volume, which counts every trade, OI measures total commitment or money currently deployed at specific price levels by market. So higher OI indicates that the strike price is highly liquid, making it easier for traders to enter or exit position at competitive price. So increasing OI generally suggests that new money is entering the market, which often implies the existing price trend is likely to continue. So how do we identify this increased OI? Is if we look at this striped bars, so these suggest that the OI has increased in this particular strike. So if you see this hollow bar, you can get to know that the contracts have been decreased in this particular strike price. So because every contract has a buyer and seller, the total open position essentially balance each other out, reflecting the net market sentiment. So abnormally high OA, especially when accompanied by rapid price swings, suggests high leverage, which can lead to panic if the trend suddenly reverse. So we'll just understand what is put OI and what is call OI. So put OI, which are green bars, these represent active put options. High green bars are often interpreted as put walls or support zone. So if you look at 24,000, now 24,000 will act as a strong support zone as we are trading above that. So this is one of the important levels as we are trading above that. So then the second support zone would be at 23 900, and third support zone would be at 23 800. So we'll just mark all these levels. So instead of line, I'll just put it as zone. This is one strong level. 23 900 would be another strong. 23 800 would be another strong level. And 23 900 would be another support level. So currently these are the our three support levels for today for intraday. We have identified these support levels using high put OI. So why I have marked 24,000 as the recent support zone is currently the price is trading above 24,000, and if we see the open interest that have increased in put OI for today is 69.37 lakhs, where call OI has just increased by 14.38 lakh. So that is a massive increase in put OI, which suggests that aggressive buyers are they are anticipating that the price will not go down below 24,000. Price likely to hold 24 above 24,000 before this expiry. So 23,900 we have around put OI has changed around 25.67 lakhs, and if we can also see the call OI bar starting to reduce, it has reduced by 5.87 lakhs. This suggests that the call writers are unwinding their position, uh, anticipating that the price is likely to hold above 23,900. And if we look at 23,800, we can also see a hollow block, which is where the call OI has reduced by 5.50 lakhs and put OI has increased by 22.66 lakhs. So even this suggests that the call writers are anticipating the price is likely to hold above 23,800. So with this, we have marked all the support levels because we don't have a strong call writers to break these zones. So we need to wait and watch how the price moves as the session progress. So this is how we use green bars and red bars. So green bars are put OI and red bars are call OI. So if we look at the support and resistance, put writers want the price to stay above a level, while call writers want the price to stay below a level to keep their premiums. So these bars also reflect the collective positioning of institutional hedgers and retail traders, effectively mapping the battleground of index. So these orange lines suggest the current strike price. So we are trading at 24.25. So 24.50 becomes the ATM. So by comparing the heights of adjacent bar, you can instantly see which price levels are attracting the most interest and which are being ignored. So we'll just also explain these spot price, these max pain levels, lot size, and PCR levels as well. So PCR suggests a ratio of total put OI to total call OI, which is called as put call ratio. So a value around 1 suggests a balanced market, while values significantly below zero point 0.8 are often seen as bearish and above 1.2 as bullish. So we exactly have a PCR level of 1.006, which suggests a balanced market. So we can expect a sideways market like neutral to slightly bullish, and the overall PCR is at 0.8, which is bearish. So for intraday levels, we should consider today's PCR level, so which is around 1.006, which suggests neutral to bullish, neutral to cautiously bullish. So 24,100 is considered as the max pain level. So if you look at the max pain level that we have, is 24,100. So this is the max pain level. So max pain level is nothing but the strike price where the maximum number of option buyers would lose money. So and option writers would experience the least loss. So that is the reason we call this as the max pain level. So if you look at the market, the current trend, the market is dealing with the fallout of the Iran-US ceasefire collapse, and we saw today price opening gap up, seeing a slight recovery. The Nifty is trading at 140 plus 140 points, which is up by 0.60%. So 24,000, 150 are primary hurdles for selling pressure is expected to emerge. So since the price crossed about 24,000, we can expect the price to reach above 24,150. So also we haven't marked resistance yet using the bars. So if we look at the next resistance, we have at 24,100. So 24,100 would be the next resistance which we have marked as max pain level. So this would be the next resistance as well. So the next resistance would be at 24,200. Yeah. So this would be the resistance and support levels which we have identified using the option chain open interest. So the composite sentiment is bearish with the PCR ratio indicating that call writers currently dominate the market. When we look at the overall call ratio, and if we look at the today's open call ratio would be sorry PCR ratio would be cautious to slightly bullish. So so 23,800 is a critical pivot. Sustaining above this level is essentially prevent further iteration, and a break below 23,800 opens a path towards 23,700. So with fresh short buildups in future, open interest of 8.58%. Analysts recommend waiting for confirmation of stabilizing before gaining long. So as we just mentioned here, we told that this would be a proper support level. So price just reacted now. It gave us a huge upside move. So you can potentially target till this level, which we consider today intraday high, and this would be the strong resistance level. So wait for the proper break, because once this breaks, if it breaks the intraday range, there is an immediate resistance which is at 24,200. So price might react, and then it can close below this level also. So be careful when you trade breakouts. So this would be the analyst for specific intraday opportunities. Some market experts have suggested a buy approach on selected stocks, including MCX and Mosaic Technology, Bondi Oxides and Chemicals. So we'll see how the market performs in further session after our analysis. So this information is for educational purpose and based on analyst observation. Stock market investments carry risk. Please consult with the financial advisor before making any financial decisions. So we'll just move to Bank Nifty now within 5 minutes. So until then, let me know if you have any doubts related to Nifty. So we have answered a viewer question on he has asked what is today's Nifty high level. So we have marked that according to our views. We have told 24,165 would be today's high range. So if it breaks that high, there is an immediate resistance above the 24,200. So price can retest to it and close below 24,165. So this would be today's range that we have given. So low would be 24,808, which exactly price open, and it has given us a. So this we have marked as 808 has marked price opened at 23,933. So this would be the low. 23,808 would be the low. So we'll just come back within 5 minutes with Bank Nifty analysis. Yeah. So we'll move to Bank Nifty analysis. So when we look at the Bank Nifty chart, so if you look at the news affecting Bank Nifties, we can see a geopolitical escalation. The primary headwind for banking sector is the breakdown of the U.S.-Iran ceasefire and subsequent attacks on commercial tankers in the Strait of Hormuz. So Brent crude prices have surged to around $79 per barrel, raising concerns on about India's inflation outlook, which could dampen expectations for interest rate cuts. So a negative for rate-sensitive banking stocks. So in India, VIX experienced a sharp spike of 24.81% on July 8th, reaching 14.54, which indicates heightened risk aversion and suggests that the sector remains vulnerable to sharp such a swing. So we'll just put the Bank Nifty open interest chart. Uh, yeah. So we can see the still the India VIX is at 13.32, where we have seen a slight decrease in the volatility, which suggests a cautious watch on the market. So overnight weakness in US technology stocks and broader global risk off sentiment contributed to a broad-based sell-off in Indian banking stocks. So if you look at the stock drivers of Bank Nifty, the first one is Kotak Mahindra Bank. It was the weakest performer among major banks, declining 3.04% on July 8th and continues to be a key stock to monitor for further weakness. So if you look at the Kotak Mahindra Bank, we have seen a sharp fall. So we could see that our indicator has also given a sell signal, which was given on 29 June itself. So with the holding days of if we had held this stock for around 10 days, we would have gained around 8.61% from the indicator. So if you look at the current trend of the market, so we have seen a higher here. So the current trend of the market is in a downtrend. If you look at the minor structure, so the major structure is still uptrend. We can see the lines. So if the market breaks this low, then this would be a major trend. Which if it comes below 337, then there is a major structure shift. But still, the minor trend is in there's a minor structure shift which is causing the downtrend. So you can look for short positions or a downtrend for Kotak Mahindra Bank if you reach certain levels. So yeah. So we have strong zones around. So we have a zone here. Also, we have a strong zone here. So yeah, you can look for these zones to get tapped or filled, and then you can look for a short position depending on the candlestick confirmation. So the second one would be the HDFC Bank and ICICI Bank as index heavyweights. Their combined performance is critical. So both saw declines of over 2.2% during the recent sell-off, with HDFC Bank and ICICI Bank showing signs of recovery in early trade on July 9th. So State Bank of India has also shown relative resilience compared to private peers. So making it a key stock to track for potential stabilization signals. So when we come to IndusInd and Axis Bank, these constitutes also faced significant pressure, dropping 2.70% and 2.35% respectively on July 8th, acting as drags on index. So if we look at the option chain, currently this orange line is the at the money. So the strike is at 20, at the money strike is at 5700. So if we look at the current price is trading at 57,174. So if you had to spot the support and resistance level using these zones, we have a strong support at 57,000, which we have just surpassed. The price has just surpassed 57,000 today. So this is one of the strong support zone. So we have a strong resistance at 57,500. So we have already marked this level. This would be the strong resistance zone. So the next big resistance would be at 58,000. So I'll just clear all the older levels that we marked yesterday. So 58,000 would be the next high level, next resistance level. So we also have a demand supply zone here. So if price stays above this level, we can expect the price to go till this level. So if it surpasses, then there is a high potential chance that the price could go till 58,000. So if we had to calculate today's range would be around yeah. So 57 659 would be the strongest the range for the high. Yeah. So if we had to calculate the down range, then yeah. So 56,480 would be the down range. So this would be the range for today. Price if price stays above this level, then there is a high chance of price closing near 57 650. So this would be the Bank Nifty's range. So first have a stabilization. Analysts strongly recommend a stabilization first approach. So avoid catching falling knife by waiting for the index to defend the 56,500 support zone. So with the index expected to trade in the white band, consider trading within the established range of 56,300 to 57,600. So once you see a strong close above this level, which is around 57,300, so then analysts recommend that there is a high chance of price to cross above 57,500 and reach 57,700. So closely track the intraday futures open interest as well. If the current short build-up starts to unwind, or it may signal an opportunity for a counter trend move. So given the elevated bids, maintain strict stop loss, a close below 56,300 would likely signal a deeper corrective phase, invalidating a short-term bullish strategies. So this would be the analysis for Bank Nifty today. So if you see a downward momentum, then you can expect the price to close. We'll just look at the support levels. We have a strong support at 57,000 and 56,500. So 57,000 we have marked, and 56,500 would be around this level. so which exactly comes near our expected range. Yeah, so let me know if you have any doubts related to this Bank Nifty and Nifty. Let me know in the comments. So before moving on to Sensex, let me know if you have any queries related to Nifty and Bank Nifty. Also, let us know your views on Nifty and Bank Nifty in comments. Let's understand that if your views aligns with our analysis as well. Yeah. So before moving on to Sensex, I'll just update the news that we have got. So the BSE Sensex has rallied significantly, jumping over 460 to 540 points to trade around 76,900 to 77,000 level. The NSE Nifty has advanced by over 130 to 165 points, successfully reclaiming the 24,000 mark as we discussed. So the market is witnessing a rebound driven by short covering after Wednesday's heavy sell-off, despite continued caution regarding geopolitical tension in the Middle East. So the Indian rupee is trading at approximately 95.52 against the US dollar, weighted down by rising crude oil price. So investor sentiments remain guarded due to the escalation of the US-Iran conflict and the subsequent surge in the Brent crude oil prices, which have approached 80 per barrel. And when we look at the sectoral performance, markets are trading broadly in the green, with gains observed in sectors like realty and telecommunication, which we will discuss deeply after 12 regarding the sectoral analysis. So Sun Pharma and Bharti Airtel are among the top gainers, while IT stocks like Infosys, HCL, and TCS have faced selling pressures. So there are no stocks currently under the FNO trading ban for this weekly expiry session. So when we look at the corporate focus, investors are keenly awaiting the upcoming quarter one future year 27 earnings session for the further market direction. Okay, so now we will move on to the Sensex analysis. Yeah. So when we look at the Sensex, so yesterday our software has also indicated as a sell signal, and we would have gained around 1.94% yesterday. So if we look at today's strike price is currently trading near 77,000. So 77,000 becomes our at the money strike. So we have a strong resistance here. So we can mark the strong resistance over 77,000 zone. So market is we have a strong support at 76, 900, 800, 700, and strong, very strong support at 500. So 900 would be our immediate support level, and 500 would be the strong support level here. So So these would be the support levels, and if you look at the resistance level, we have a strong resistance at 77,000, which we have marked. 77,500 would be the strong resistance, and 300 would be another level. So, so these would be the support and resistance level. And if we look at the strike, we can see there is call unwinding happening near 76,500. So call writers are starting to anticipate that the price will stay above 76,500, also 76,600, and we could see a decrease in 76,700 as well. So put writers say 77,800, they won't cross 77,800. So price likely to stay below 77,800, and we couldn't see any of the 77,500 also we can see an increase. So we have exactly marked the resistance level on this pattern. So if we had the Sensex opened on a firm note, reclaiming ground after Wednesday's massive sell-off, which was triggered by geopolitical escalation in the Middle East. So investor sentiment has been blustered by statements from U.S. President Donald Trump, who indicated that he does not expect the conflict with Iran to restart, which has helped calm market nerves. So, despite the optimism, the recovery remains cautious as global crude oil price remains elevated, which is hovering near $79.80 per barrel. The market resilience is further supported by consistent buying from foreign institutional investors who have remained net buyers even during the recent volatility. So, if you look at the open interest and trading levels, the yeah. So the data for the Sensex shows a combined OI view, which aggregates the position of market participants at various strike price. So the current price is at the ATM strike price, which serves as a central reference point for analyzing the battle between the bulls and bears. So we could see that bears are more. If we see the total call OI and total put OI, total call OI stands at 8 crores and put OI stands at 8.7 crores. So yeah. So if you look at the PCR ratio here, we could see 1.227, which is above 1, which indicates bullish. And the max pain is at 77,000. This is where the option buyers lose their premium value. So potentially, it indicates a short-term bullish sentiment. So traders often use this OI spikes to identify where big money is positioned and to determine the potential range for the day's environment. So if we look at today's potential range, we'll be able to 77, 390 to 400 stays as the first range, high range for this for today for intraday, and 214 remains as the low for the intraday range. So if you look at the key economic and corporate drivers for today, today's market activity is heavily influenced by the upcoming corporate developments, most notably the first quarter future year 27 earnings announcement from Tata Consultancy Service, and other stocks like Tata Steel and various automakers are also uh, in focus due to recent production updates and price hikes, respectively. So, the oil and gas sector is witnessing structural tailwinds due to the surge in the crude prices through downstream refiners. So, conversely, interest rate sensitive sectors like automobiles and realty are facing headwinds due to a sudden spike in global bond yield. So, finally, the India VIX, while having spiked significantly on July 8th, is being closely monitored by traders as a watch for whether the current risk aversion is sustaining or subsiding. So, if we had to plan trade plans for if you had to plan trades for Sensex, so since it is in a proper current support zone, so wait for the price to close above 77,000. So once it closes above 77,000, then look for a retest and you can target any of these highs. So if it fails to close above 77,000 and breaks below this support level, then you can target either this level or today's range low. So this would be the plan trade ideas for Sensex. And also, yeah. So this would be the analysis on Sensex, and so this information is for educational purpose and based on market observation. So market conditions are volatile. Kindly consult financial advisor before making any investment decision. So but this is particularly for educational purpose that might help you for taking better decision before executing a trade. So we'll be back with the sectoral analysis and stocks to look for today based on open interest. And until then, let me know if you have any doubts related to the index. So, yeah, sure. A viewer has asked, can I ask some question? You can definitely put your questions in the comment section. We'll answer it.
So, hi guys, welcome back. So now we'll be discussing about the sector's performance. Let's look in the sectors. Sometimes index goes up, but not every sectors moves the same way, right? Like today, we are clearly seeing some sectors leading the market, while a few others are still under pressure. So look at the top performance list. First is banking and financial sectors. So first strong sector today is banking and financial services. So yesterday banking stocks fell sharply because of the panic in the market, but today we are seeing a good recovery as investors are buying quality banking stocks at lower prices here. Just keep your eye on HDFC Bank. Actually, it's one of the biggest reasons behind today's market recovery. So that's why you just keep your eye on HDFC and ICICI Bank. It's also kind of showing strong buying interest today. So keep your eye here. And yeah, lastly, the SBI. After yesterday's fall, it's witnessing a good relief rally for today, and this is also some positive sentiment around the whole SBI group, which is actually supporting the whole stock. So just check out the SBI today. So overall, banking is one of the strongest sector for today, and the second sector is realty. This is actually second doing well sector, which is actually doing well sector. So when market confidence improves, real estate stocks usually attract fresh buying. That's exactly what we are seeing today. And you just keep your eye on DLF and Godrej properties and Oberoi Realty. So if market sentiment, if it remains positive, the sector could continues to perform well for now. And yeah, pharma, the actually it's a third sector which is outperforming. So even yesterday when the market was falling, pharma stocks stayed relatively strong. So today they are continuing their momentum. So here you should just observe stocks like Sun Pharma and Dr. Reddy's Laboratories, which I mentioned in the morning, because there is actually good open interest movement increase. So the third one is Cipla. So one reason for this strength is that pharma is considered as a defense sector during this uncertain times. So also, if the rupee weakens because of this higher crude oil prices, pharma companies benefits since many of them earn revenue of this in US dollars. So HDFC, ICICI, and SBI, these are the stocks actually leading today's rally. So actually, we are seeing some strong recovery in the banking sector. Investors are actually buying quality banking stocks at lower levels. So just keep your eye on SDFC, ICICI, and SBI for now. And in the reality, as I mentioned, DLF, Godrej Properties, and Oberoi Realty, if market sentiment, as I mentioned, if it remains in the positive through the whole day and through the whole session, this sector could actually continues to outperform for the whole day. Actually, here the investors are showing some fresh interest in this space after actually yesterday's full correction in reality. So overall, the today's market leaders are actually are banking, realty, and pharma. These other sectors actually showing strongest buying interest today. So keep an eye on this during your whole trading session, today's whole session. as they could continue to outperform if the positive momentum actually continues for the whole day. So we'll jump to the underperforming sectors. So we'll get to know where the actually pressure is for today. So even though market is trading in the green, not every sector is participating in this rally. So some sectors are actually still facing pressure because of this specific news and also some global factors. So the under in underperformance list, the first one will be IT. The first underperforming sector is IT, and this is probably the most important one to watch today because reason is very simple. Today's TCS is announcing its quarter one results after market hours after 3:30. So since TCS is India's largest IT company, its results usually decide the mood for whole entire IT sector. So right now, traders are not reacting to the results because they haven't come out yet, right? So instead, they're just being cautious and avoiding big positions before their TCS's announcement. So the market is expecting a mixed quarter for TCS, and revenue growth is likely to remain flat, while margins may come under pressure because the company implemented annual salary hikes from last April. And on top of that, there are still concerns about AI changing the IT services businesses. So, with many investors worried that increased automation could reduce pricing power and affect future profit margins. So, because of this uncertainty, IT stocks are not attracting any aggressive buyers or buying today. So, here the key stocks to watch are one is TCS and Infosys and HCL Technologies. So, all these are trading cautiously ahead of these results. So here my suggestion is only simple. If you are planning to trade in IT stocks, it may be better to wait until TCS announces its result after the market and management shares its outlook. So that will give the market much better idea and clarity before taking any positions. So the second one in the underperformer is metals. Interestingly, there isn't any major negative news for these metal companies. In fact, Tata Steel recently reported good production numbers, but the sector is still trading weak. The main reason here is profit booking. Metal stocks have performed well recently, as we know. So, some investors are choosing to book profits today. And another reason is global uncertainty, as we know. Metals prices depend heavily on demand from China, and investors are like still unsure about how strong Chinese demand will be over the coming next months. So, because of this, traders are avoiding aggressive buying in these metal stocks. So here you should just observe the Tata Steel and JSW Steel, Jindal and Hindalco. So for now, the sectors look sideways. So it may be better to wait for a, stronger buying confirmation before actually entering any in the coming fresh trades. And the third sector, which is actually underperforming, is oil and gas and aviation. So this is actually direct link to the rise in crude prices, as we know, as we discussed already. So after the latest geopolitical tensions involving with Iran and US, Brent crude has moved close to $78 per barrel. So that's creating a little bit pressure on companies who cost depend heavily on this crude oil. So the biggest example is Indigo. As we took in the morning, fuel is one of the airline's largest expenses, and so when crude oil becomes expensive, airline profits usually come under pressure. So similarly, oil marketing companies like BPCL and HPCL are also trading weak. Higher crude prices increases their input cost, and if fuel prices aren't increased immediately, their profit margins can actually get affected. So even some paint companies like Pidilite remain on investors' watch lists because many of their raw materials are crude based. So rising oil prices increase manufacturing cost, which can actually affect their company's profitability. So as I told, today's underperformance list, sector list is one is IT, metal, and oil and gas, along with this aviation. So IT is waiting for the TCS earnings announcement. Metals are seeing profit booking and cautious global sentiment. And aviation and oil marketing companies remain under pressure for now because of this higher crude prices. So these sectors may continue to remain volatile throughout the whole today's session. So traders carefully trade and wait for the any confirmation before actually taking any fresh positions. So, as I mentioned, the strongest sectors were banking, realty, pharma. Banking is recovering after yesterday's sharp fall, and realty is seeing some fresh buying as market confidence improves. Pharma is continues to stay strong because it's considered as a defense sector during these uncertain times. And the other hand, the weakened sector are IT, metals, and oil and gas, along with this aviation. Our IT stocks are trading cautiously ahead of this TCS results, as I mentioned, and metals are witnessing some profit booking. And oil, gas, and aviation are like because of this crude oil prices rise. So if you are just planning to trade today, just keep a close eye on these sectors. And most importantly, watch TCS results after the market hours because they could directly decide the direction of this entire IT sector for the whole next few sessions. So let's move to the commodity as well, because today's commodities are actually reacting even more than the stocks market, especially due to the ongoing Iran situation. So we can start with the gold. Let's start with the gold. This is actually quite surprising about this gold. Normally, whenever there is a geopolitical tension increases, investors rush towards gold because it's considered as a safe haven asset. So if you would expect gold prices to rise, but that's not what happening today. On the MCX, gold futures opened around 1,55,200 per 10 grams lower than yesterday's close. So during the today's session, prices slipped further and traded close to 1,55,000, showing a decline of around 0.3%. Even in the international market, gold prices are trading lower for the second consecutive session. So you might be thinking, why is actually gold falling despite raising global tension? The biggest reason here is US Federal Reserve. Investors are expecting Fed to keep interest rates higher for longer because inflation risks are increasing, especially with this crude oil prices moving up. So higher interest rates generally reduce the demand for the gold, since gold doesn't earn any interest. And another reason is that gold has already seen a strong rally earlier this year. So after such a big move, many traders are booking profits, which is actually putting additional pressure on these prices. So, however, there is one positive point for this long term here for this gold. The central banks, especially China, continues to increase their gold reserves. This shows that long term demand for gold is still strong, even though prices are under kind of pressure in the short term. So the short-term trend in gold remains weak, but the long-term buying interest is still present here. This is definitely a commodity to keep on your wish list or watch list over the coming upcoming weeks. So we'll jump to the silver. Silver is actually falling even more than the gold. So on the M6, silver futures are down by nearly 0.8% with the prices trading close to 2.29 lakh per kilogram. So you might be wondering why is actually silver is falling. So here the reason is almost same as gold. The US dollar is strengthening, and investors are expecting the US Federal Reserve to keep their interest rates higher for their longer period. So higher interest rates usually reduce demand for these precious metals like gold and silver. Silver is also more volatile than gold because it's not just some precious metal. It's widely used in some industries like electronics, solar panels, and manufacturing. So whenever global economy like uncertainty increases, silver tends to see bigger price swing in that than the gold comparatively. So don't assume that geopolitical tensions always mean gold and silver will go up. Right now, the market is focusing more on interest rate expectations and also the stronger US dollar. And that's why both the gold and silver are like trading lower despite ongoing Iran situation. So keep an eye on both of the Fed's commentary and crude oil prices because they could continue to influence the price of these precious metals like gold and silver in the coming upcoming days. If we take a crude, we already discussed about the crude. This is commodity that's having a biggest impact on this stock market right now. Over the last 2 days, crude price is having risen sharply. Brent crude is trading close to $78 per barrel, while WTI crude is trading in the mid $70 range. Even today, price are like staying strong, showing that the market is still worried about the ongoing geopolitical tension situation. So the only reason crude is rising is the tension between this U.S. and Iran. After fresh military strikes, concerns have increased that conflict could continue for longer. Because of this, traders are worried about possible disruptions to global oil supplies. And another major concern here is that the Strait of Hormuz. This is one of the world's most important oil shipping routes, as we know, with nearly 20% of global oil supply passing through this strait. So, if there is any disruption in this region, oil prices can move up very quickly. So, this is exactly why we are seeing crude remains at these levels today. And why should this Indian investors like care about this crude oil? As we know, higher crude prices directly impact our economy. India imports large portion of its crude oil, so when oil becomes expensive, our import bill increases. It also put pressure on the rupees and increases the inflation here in India. So that's why sectors like aviation, oil marketing companies, and the paint companies are under pressure today. So stocks like Indigo, BPCL, HPCL, and even companies like Pidilite are feeling the impact because this raising crude oil increases their cost and can reduce their profit margins also. So among all these commodities, crude is definitely one to watch very closely. If geopolitical tensions continues or oil prices move even higher, it could influence not just these sectors but also the overall market sentiment, the whole market sentiment in this coming upcoming days. So we'll quickly summarize this commodity market today. Gold and silver is both trading lower today, as I mentioned. Even though geopolitical tensions are high, the market is focusing more on this possibility of this higher US interest rates and also their stronger dollar, which is actually putting pressure on these metals. On the other hand, if we take this crude oil, which is actually continues to more higher, ongoing tensions between US and Iran, along with concerns over global oil supply, which is about this Strait of Hormuz, are keeping crude oil prices elevated. So for us in India, crude is most important commodity to watch, and it directly impacts the stocks like aviation, sectors like aviation, oil marketing companies, and the paints. They also impact the inflation, the rupee, and the overall market sentiment. So keep and close eye on the crude oil throughout this week. As long as geopolitical situation remains uncertain, crude oil is likely to remain one of the biggest drivers of this Indian stock market for now. So, the quick important disclosure for all of you. Everything we discussed in this video, including index levels, sector views, stock specific open interest data, and commodity updates, is shared purely for educational and informational purposes based on publicly available data and current market news we have and we got. So, this is not a personalized investment recommendation and it does not account for your individual financial goals or any risk appetite or your portfolio situations. So markets are subject to risk and past performance for open interest trends are not guarantee for future certain returns. Please do your own research or consult directly with your advisor suited to your specific financial profile before making any investment or trading decisions. ಅದೇ ಸ್ವಲ್ಪ ಲ್ಯಾಗ್ ಆಗುತ್ತೆ.
ಅದು ಚಾರ್ಜ್ ರಿಮೂವ್ ಮಾಡಿದ್ರೆ ಆಫ್ ಆಗ್ತದೆ ಇಲ್ಲಾಂದ್ರೆ
ಅವ್ರಿಗೆ ಇಂಟಿಗೆ ರೆಡಿ ಆಗಬೇಕಂದ್ರೆ ನಾನು ಇವಾಗ ಕುತ್ಕೊಂಡು ಕೊಡಬೇಕು.
ಮೇಲ್ ಐಡಿ
ಅವ್ರು ಹೇಳಿದ್ರೆ ಹಾಕ್ಬಿಟ್ಟು ಅಲ್ಲಿ.
so hi everyone, we just touching on the commodity update. So the commodity landscape is currently witnessing a significant decoupling where energy assets are driving higher. So while precious metals are facing downward pressure, so if you look at the gold, I'll just change the chart. So before that, if we look at Nifty chart today, we saw a sideways market. We saw yesterday a huge sell-off, so we got a sideways market today. So we got a buy signal around today's morning itself, exactly once it closed above, once it was trading near 23,000 for 24,000. So we exactly we could have gained more than 115 points. So then we saw exact sideways market. So when it comes to gold futures, so yeah, we could see a strong downtrend in the market, but we just saw a minor structure shift in the market here. So I'll just remove all the previous drawings. So yesterday itself we had told that the market is in strong downtrend. So if we look at the 1 hour chart, we are currently trading near a strong demand zone here. So we are here trading near a strong demand zone. So you can look for short position once you get a strong bullish bearish candlestick pattern. So, so geopolitical inflation fears driving hawkish Fed rate expectations. So currently gold is down by 1,44,798. It's down by it's up by plus 0.76%. So M6 gold is caught in tight 2 week consolidation plan. On chart sellers hold a near micro advantage as long as price stays below structural resistance at 146,500. And strong technical support is positioned down at 1,44,000, 1,40,000. So we will consider this as a strong zones. So we once you see a break below this level, and you'll like immediately have a strong reaction to this level. So yeah, so we need to check if this breaks above this level, then you can target this thing, this resistance level. So if this breaks below here, you can look for a reaction in this level, maybe look to break this level and give you a major structure shift to the downside, leading to continuation of the downtrend. So the global macro and geopolitical drivers for gold would be like US-Iran conflict and inflation fears. So recent fresh US military strikes on Iran and the sudden cancellation of Iranian oil have shaken up fragile Middle East ceasefire. So when geopolitical flare-ups usually trigger aggressive safe haven buying into bullion, this crisis is simultaneously driving global crude oil prices drastically higher. So Brent is hovering around $76 to $77 per barrel. So the Fed's higher for longer hammer. So the spike in oil has reignited massive institutional fears of new inflationary wave. Consequently, the market has sharply raised expectation of US Federal Reserve interest rate hike in September, surging to a 63 to 67% probability according to the CME FedWatch tool. So, because the market expects higher interest rates to curb inflation, the US dollar index has gained strong momentum toward the 101 mark, which is currently trading around 100.97. A stronger dollar and rising US Treasury yield increase the opportunity cost of holding non-yielding physical gold, keeping a firm lid on any major upside breakout. So if we look at the domestic MCX futures, gold futures are trading near 1,44,795 to 524 per 10 grams, fluctuating right around the 1.44 lakh mark. So the directional momentum index DMI and ADX reading near 33.5 indicate that this short-term downward consolidation trend currently has structure strength, giving short-term base the upper hand. So that's what we also said. So currently the market is trading near the 1 hour supply zone. So once you see a strong break below this 1,44,395, 15 minutes candle closing below this, then price can easily reach to this range, which you will be getting around 1,000 points. So once you see a tap in this, you can expect the price for a retracement level near this zone, or if you get a or you can also look for the retracement near this pivot level. This will be considered as a broken support level, which will turn as a resistance. So you can look for this level to be retested, and then you can target these lows. Target this lows as so this would be the possible moment for gold. So if price breaks, if price doesn't respect this demand zone, then you can look for a possible move. Yeah. So if price has to turn bullish, then you need to wait for this level to be broken. So this would be the final level for price to break to turn bullish. So you can see the trend here. So price is currently bearish. We can see. So if it need to turn bullish, then it should break this level. Then you can look for bullish signal. But current possibilities suggest that price is likely to break this lower and continue in a downtrend. So if you look at retail and jewelry rates across major Indian cities, Despite the institutional future volatility, retail gold prices across premium jewelers like Malabar Gold and Kalyan Jewelers remain relatively steady after a series of minor daily price drops earlier this week. So 24 karat fine gold, which is 919 in purity, is averaging around 1,43,120 to 1,44,580 per 10 grams, depending on the local regional taxes and state structure. And 22 karat gold is sitting approximately at 1,31,190 to 1,32,530 per 10 gram. So if you're tracking gold, you must keep eye on its highly volatile sibling silver. So silver has experienced a severe structure flush out over the last 96 hours after rallying hard towards local all-time high near 2.50 lakh per kg last week. So MCX September silver futures plummeted nearly 3% yesterday, breaking below major psychological supports to trade down near 2,21,000 to 2,25,285 per kg zone today. So heavy overhead resistance for silver is now firmly established at 2,37,000. So this will be the analysis for gold. So we had some technical issues in the screen sharing part. So we'll just move to the crude oil futures. So before starting, we'll just look at the structure of crude oil. So we know crude oil is in downtrend. So we have got a proper structure shift for crude oil in the year. So if you look at the 15 minutes chart, we could see that there is a. We just look for demand zones where we have exactly the prices trading here, a strong demand zone here. And if you look at the 15 minutes chart, also we got a strong CAST. So you can wait for this gap to be filled and close 15 minutes close above this. So then you can look for proper long setups. So yesterday we have exactly predicted the price might come for a retracement and go above, and we exactly predicted this move. Right. So we would have got around 3 to 8.5%. So yesterday we had marked around the 135 that the price might exactly come for a retracement and it would move around 270 points. So price has taken a high and it has come to a demand zone. So you can wait for the price to close above this level and target this resistance level. So looking at the core driver for crude oil, we can on Wednesday evening the United States launched the second consecutive round of military airstrikes against Iranian targets. This occurred shortly after US President Donald Trump declared that the temporary interim peace agreement with Iran was completely over. So the Strait of Hormuz, the U.S. military stated that these operations are intended to keep the Strait of Hormuz open to commercial shipping following attacks on three commercial oil tankers earlier this week. Because the Strait of Hormuz handles roughly 20%, one-fifth of the world's daily petroleum supply, any military friction there instantly sparks severe global supply shortage fears. So adding fuel to the fire, the U.S. Treasury Department officially revoked the temporary sanctions waiver that had previously authorized Iranian crude oil exports. So the window for global buyers to stop purchasing Iranian crude has now been aggressively shortened to July 17, 2026. So if you look at the Brent crude futures, which is trading up by plus 1.14% at $78 per barrel, pulling back slightly after testing an overnight spike high of $80 per barrel. So, world WTI crude futures is also trading up by 1.22% at 74.42 per dollar. So, in domestic MCX futures, we just discussed the technical structures of the crude oil. Currently trading at 6,967 per barrel, which is down by minus 1.50%, holding on to yesterday's staggering plus 6.7% single day explosion from 6,705. So the intraday trading range today's price action has carved out of high of 7,138 to low of 7,081. So keep a note of high today. The intraday range of high would be around. So yesterday was we got 527 points. this was the expected range. So market exactly broke this range around. So 6,950 would be the range low, and 7,000 to 77 would be the range high. So today's expected range would be in this level. So if you see a breakout above this price with a strong momentum candle, then there is a high chances of price moving the direction where it breaks out. So always wait for the confirmation. So we saw a break below this level, but we couldn't take because we have a strong demand zone and price is in uptrend. So always confirm this with the trend direction. So we again saw price closed inside this range. So once you see a close below above this, then you can expect the price to go till 7,278 today. So we also have a ripple effect on Indian stock market for the on the ongoing war. So higher oil prices act as heavy structural tax on an oil importing economy like India. Yesterday and today's stock market action shows a clear divide between sectoral winners and losers. So companies that extract oil are direct beneficiaries of higher realizations. Shares of ONGC, which is trading higher at 246.71, and Oil India, which is trading at 428.30. Oil marketing companies, fund retailers are taking a severe beating due to expected margin contract. HPCL is trading over 4% lower, BPCL is down 4%, and IOCL slipped 3%. So aviation and paints, jet fuel and oil derivative make up the core raw material cost for these sectors. Consequently, interglobe aviation fell over 2% and market leader Asian dropped by 2.61%. So a clean structural breakout above this level exposed the outer target of 7,400, which I have marked as 7,270. If there is a clean breakout, then you can look for the outer target of 7,400. And if it breaks below this demand zone, so then you can expect the price to reach 6,850 here. The resistance, we could see a strong support level here. Yeah. So this would be the analysis on crude oil. So we'll just update about the stocks that we recommended today morning. So the first stock we told you to put in the watch list was Amber stock. So we are told that the stock is in uptrend. So we told that the stock is in uptrend. So we could see the time we updated was around 9:50. So by 9:50 we told the stock is in uptrend. Look for buying index. So we exactly got uptrend move. And the second stock we told was Nuvama Wealth Management Limited. So we when we have updated this stock around 9:30, 9:35. So we would have easily captured around 2.63%. After our update, it went more than 50 points. So these were the stocks that we gave today. And when it comes to Nifty is being traded in the range after a huge sell-off. So after this Tuesday expiry, we can expect some stable movements. So we expected that Nifty would break this level, but it didn't break. So we couldn't take any uh, recommend any positions regarding this. So we'll answer the questions that's been asked by viewers. So we'll just start that in another 15 minutes. Then ಚೆನ್ನಾಗಿದೆ.
So, yeah, guys, we are discussing some questions as we do in every session. I'll be asking some certain questions which everyone have there in their mind, especially some newbies and beginners and who want to learn more about this. They'll be having some questions and they don't know some certain terms in this. So, I'll be asking questions and to the expertise he'll be answering. We'll just understand the scenario and conversation properly. You'll get a brief idea about the terms and knowledge. So the first question is, what's the difference between limit order and market order?
So market order tells you broker to buy or sell a stock instantly at whatever the current market price happens to be. It guarantees speeds but not price. For example, if market is trading near the particular stock is trading near 400 rupees, then that is considered as a market price. And limit order is nothing but it tells you broker to buy or sell a stock only if it hits a specific price you choose. So let's take the same example. If the price is trading around 400 and you choose to execute the order when the price reaches 360, so that would be considered that would be considered as a limit order. So it guarantees price but doesn't guarantee order will actually get filled. The market moves fast.
So I hope everyone got their answer. So what's liquidity? This term to everyone like beginners though they'll be having their in their head and they'll be curious about this. What's liquidity and why it matters here? Why does it matters more?
So liquidity refers to how easily you can buy or sell an asset without drastically moving its price. A highly liquid stock has million of shares trading daily, letting you exit smoothly. So an illiquid stock has very few buyers and sellers, meaning you might get stuck in a position or be forced to sell at a major discount level. So this is what we call liquidity. Hope it's clear for your answer.
That was a clear answer. Hope everyone got their answer for their doubts. So I just want to ask the difference here between this top line and the bottom line, both of their growth. I just want to ask their difference, top line and bottom line.
So top line refers to a company's gross revenue or total sales. It represents the money flowing into the business before any expenses are paid. And bottom line refers to net profit after accounting for all operational costs, taxes, interest, and depreciation. So a company can grow its top line massively, but still have a shrinking bottom line if expenses are out of control. So this is what is the difference between the top line and bottom line.
Okay, got it. So what's x divided like? So I was asking about x dividend date. What's that mean? X dividend date.
So this is the cutoff date for dividend eligibility to receive an upcoming dividend payout. So you must purchase and own the stock before the ex-dividend date. If you buy the stock on or after this date, the dividend goes to the previous owner, and the stock price typically drops by the dividend amount on this morning. So now I'll ask you a question. So what does the company's debt to equity ratio tell you?
So it's calculated by this dividing total debt by its shareholder equity generally, and this metric measures financial leverage. It's leverage, and a high ratio indicates that company is aggressively financing its growth using loans or rather than its own fund. So while this can actually supercharge profits in a booming economy, it introduces a massive bankruptcy. It's risk if revenue slows down or interest rates, if interest rates rise. I think you got that point. So let me ask you one more topic, which is value trap. What's that value trap? Trap.
A value trap is a stock that looks incredibly cheap based on standard metrics. Like a low P ratio or a low price to book ratio, tempting investors to buy. However, it is cheap because its underlying business model is dying, market share is eroding, or corporate governance is broken. So the price continues to slide even lower over time.
So I'll come to the very important term every day during the news is during the updates. Every day we'll be mentioning, and actually newbies and most of the people don't know this term, which is like volatility index, VIX we call it, right? So what's that mean?
So often called the market sphere balls, the VAX measures expected market volatility over the next 30 days based on option pricing pattern. A rising VIX means institutional traders expect sharp price swings and instability, while a falling VIX signals a calm, stable, and complacent market environment. So this is what we call it as volatility index. So with the help of volatility index, we can understand whether the market is volatile or not. So if you see a VIX around 11 to 12, which is decreased by 0.6 percent, then we can anticipate that the market has pulled off a bit. So the bulls are stable. But if you see a high volatility index of 14 and 15 and the price is moving up, there might be chances of liquidation. So making traders fear. So this is what we call as volatility index.
Okay, got that idea. So one more question, one more general question. So what's margin trading? And everyone definitely tell it it's risky. So why it's risky and what exactly is margin trading?
So margin trading means borrowing funds from your broker to buy more shares than your actual cash balance allows. So while this magnifies your profits, the stock price moves in your favor. It equally amplifies your losses. If the stock runs past a certain threshold, the broker triggers a margin call, forcing you to add cash immediately or liquidating the position at any loss. Yeah, so we have covered all the questions that were asked by our viewers. So if you have any questions to ask, let us know in the comments. We'll answer those questions as well. So before that, we had given an update regarding the Nifty that if Nifty closes below this level, then there might be a strong downtrend, downward momentum. So exactly we would have captured around 71 points over here. So yeah, so we'll still consider the Nifty to be in bearish as it is failing to close above 24,000. So we need to wait and watch how Nifty reacts tonight for the economic event that we have. So we have existing home sales news. So we need to wait for this particular news which we have at 7:30. So we'll get an idea whether Nifty will close about 24,000 or not. So even if in this news, if Nifty fails to close above 24,000, then we can expect Nifty to go down still until we get a positive news regarding the bond.
Yeah, guys, it's almost time. Just check out your proper exits and your positions properly. And if you are holding position for future or maybe coming days, just be carefully with that and do a proper risk management and just properly check your capital. So have a good day. People who have exited from the market and people who are holding positions, everyone, it's good luck for them. And we'll be back tomorrow with good updates, new updates, and the updated news, overnight news, and today's post market and pre market, and also the tomorrow's analysis. So I do attend the tomorrow session with us. So yeah, you can explore the our company profile, which I mentioned in the description. Just go through the link. You can contact us anytime. Our team will contact you soon. If you want to know more about our tool and the software we are using right now and the indicators, you can just check out our page and you can call, you can contact us. And thank you so much for joining. Have a good day. We'll uh, we'll meet again tomorrow. Thank you so much. Have a good day.